Hello, ladies and gentlemen. Greg McCloskey from ForexLive.com. Today's date is March 13th, 2023. This is the Forex technical report. But of course, fundamentals are driving the markets, but that also provides some opportunities for the technicals to take control, give traders some idea as far as what are the risks, what are the biases, even though markets are very volatile sometimes during these type times. This is where you need to rely more on technicals. So we'll try to make sense of what that is, what the technicals are doing, where the biases are, where the risks are, and let's get started. I can go into all the fundamentals. You can probably read them, or you can read about them on ForexLive.com. Also, Adam is fully onto it, but certainly seeing lots of market movement. We're seeing Treasury yields come sharply to the downside. The 2-year yield reached to 4%. It was at 5.085% on Wednesday of last week. So that's a move of over 100 basis points to the downside. You'd think that might be stimulative to the economy, but you see where mortgage rates kind of settle going forward, because that's a big impact on things like real estate, which has been hampered and slowed down, but with more regulation likely on the going forward for banks particularly. That increases their costs, and I'm for sure that the mortgage rates will not come down the equivalent of 100 basis points. We will see, of course, but the other concerns about the economy, the expectations for the Fed to tighten by 50 basis points, that's out the window, and we're looking down toward 0 or 25 basis points when they meet on March 22nd. Of course, we have CPI data coming out tomorrow. I said we'd talk about the technicals, so let's start by looking at the euro versus US dollar. If we take a look at that currency pair, we did see a move to the upside and trading in the Asian session. This is a 4-hour chart, by the way. That price took, or that move to the upside took the price above the 38.2% retracement of the move down from the 2023 high down to the low here. That 38 comes in at 1.0717. Also had this swing area through here where it goes back in time to to here. We're in a number of different swing lows and highs. So the buyers were trying to take control above this area, also above the 200 bar moving average of 4-hour chart. But as you can see, we rotated back to the downside and moved back toward this other swing area where we had a number of different swing lows and highs going back to way back over here. I'll outline some of them through here, move below it here, and some volatility up and down. This is where it's primarily defined through here, and then we traded above and below through here, kind of a sloppy price action here. And again, on Friday, because of the volatility in the market, so we did see sharp moves up to the downside. We did move just below the low of that area, 1.0553, and then started to bounce back. We are moving back toward the 200 bar moving average on the 4-hour chart that comes in at 1.07079. That's right here, and we'll be looking for perhaps some sellers against that level. Also 38.2% retracement, and this other swing area up here through here. So we're going to be looking for sellers probably against this level right through here, against the 200 bar moving average. If the price should move back above that level, it starts to get more into the bullish side of things again. But watch this level right here, 1.0707 level. See if the market can hold resistance against that level. Also, keep an eye on this level right through here. We are trading just around it here. Here, as you can see, it was a swing high going back to early March, and then or 2 weeks ago, and then last week it was a high as well before we saw the volatility on Friday's price action take the price above that level briefly on Friday before we rotated back to the downside into the close. So watch, we're currently right around that area, 1.0692-ish type level. Move below it with more momentum, and we've found the sellers against the 200, found sellers against this area, and we can look back down toward this swing area. So that's the euro versus US dollar. Take a look at the dollar versus yen, and again we look going on to the 4-hour chart here. And what I want to bring your attention to is this swing area through here, where we have a number of different swing lows and highs. I'll get on my arrow here, going all the way back to this area through here, where support and resistance come in. over this area here. We moved above it here and then came a little bit below it here before rotating to the upside here. And in trading here today, we've fallen below both the 200 bar moving average of the 4-hour chart and this swing area right through here. And we're trying to stay below it right now. 132.90 is the top side of that. 132.70 to 132.90 is where those levels come in. Currently trading at 132.60 right now. So we are back below that level after going up and testing that area. So that's pretty good from that perspective, that the sellers are staying in control, being influenced by the sharply lower rates in the U.S. Let's take a look at the 5-minute chart, because this is an interesting dynamic here. And what I like to look, especially in trending markets, when the market takes some big moves to the downside, is moves below or moves followed by corrective moves to the upside. So this is a sharp move to the downside, and then we have a correction into this region right through here. I'm going to put it in red here, but this area is what I call the correction zone. Move down, correct into the 38.2 to 50% retracement area. That's between these two levels right here. And the market started another trend leg to the downside, and we put another Fibonacci from that high to the low, and we find another correction zone between the 38.2 and 50% retracement. And as you can see, the price just moved up to the high of that area, which also corresponded to that resistance on the 4-hour chart. And we are finding some sellers against that level. So in the short term, watch the 133.03 level. If the price is able to stay below that 50% retracement level, then it says that sellers are still stepping down. They're not being scared out of their position. They're selling into resistance, and that is a good sign for this sellers. So keep an eye on the 133.03 level. We'll see if the market can stay below that level. The sterling versus US dollar. We'll take a look at that next. And in this case, I'm taking a look at the hourly chart. And what we see of the high price here in the sterling versus US dollars, market came up to these high prices, swing highs, going back to, looks like February 21st and then February 28th or thereabouts. And then we came up to that area right through here and found willing sellers against that level. That was nice sell there on the sterling versus US dollar. Rotated back to the downside. 50% retracement of this move from this high to this low comes in at the 120.35 level. And as you can see, we started approaching that level in trading here. Also, this level right through here corresponded, we were talking about this level last week, where we had different swing high, swing high, swing high, swing high, swing high. Nice little ceiling here. Had that failed break and then reestablished the high price right through here before rotating sharply to the downside and trading on Friday. The market moved back above that level, back above the trend line here, and that opened the door for further upside momentum. And by Friday's close, however, we moved back below that level and then gapped higher, held support here against that old level, and again did it fairly nice job right here, 120.46 fixed. So watch that level going forward. If stay above is more bullish. If we move back below that level, we could see further selling pressure in the sterling versus US dollar. So that's a little tricks and little ideas here for you to base your trading on. Of course, it can get more detailed than that, but be aware that the market's more volatile. And buckle up, folks. It's going to be a wild ride. My name is Greg Mikulowski. Good fortune with your trading. Bye-bye now.